Finance ministers of the G20 major economies meet in Moscow today. Talks look likely to be dominated by the so-called currency wars. I'm speaking to Natascha Gewaltig from Action Economics to discuss the start of the meetings. Natascha, thank you for joining me. Firstly, what are the main issues you expect to be debated this weekend?
The general agenda for the G20 and especially now on the Moscow is how to find back to growth, which is sort of what Draghi sort of outlined today as well. That includes discussing the financial architecture, and of course at the moment one of the key questions also on the agenda will be the issue about currencies and especially the accusations that Japan is trying to devalue its currency.
The main topic most onlookers will be waiting for is, like you mentioned, the topic of devaluing currency to increase exports, or currency wars. Do you think this issue is being muted today?
Well, I don't think there is going to be more meat on there than early in the G7 statement we had earlier in the week. There was a draft statement. Well, a draft statement has been circulating, and there it just sort of says that it repeats, or the draft communique repeats the previous language of the G20, just sort of saying that excess FX volatility has to be avoided, and it's against disorderly movement in exchange rate. And apparently the draft doesn't repeat the language of the G7 statement on the need to use fiscal and monetary policies only for domestic objectives. I don't think we are going to get much more of a stronger statement there, and I don't think Japan will be singled out. That doesn't mean that this isn't being discussed behind closed doors. I'm pretty sure there are going to be discussions on that issue, even if they don't turn up in the official communique or the official agenda.
Could we see a threat of a trade war if Japan continues to devalue its currency?
I don't think there is a threat necessarily at the moment, but of course, in the long run, I mean, each time someone tries to sort of devalue its currency deliberately, it's not going to go unnoticed, and there are going to be retaliations as well, apart from the fact that it usually doesn't quite work. I mean, if you look at Japan, it tried to get itself out of deflation before by targeting the exchange rate. It hasn't really worked. Or, you know, the UK has seen a sharp depreciation in the real trade rate. It's sterling, but that hasn't really helped its export performance either. I mean, the exchange rates alone are not really a bailout ticket in that terms, and it masks problems you may have in terms of just competitive weakness, and you then sort of get into a spiral where you actually fail to catch up with other countries and make the problem worse in the long run. If it gets too obvious, then Japan will have to face some sort of questions and demands from other countries. But I think at the moment it's still too early to speak of a trade war immediately.
Lastly, in this current environment, is competitiveness between countries a positive thing? Perhaps not currencies, but things like innovative products, research and development?
I think generally competitiveness competition is generally always a positive thing. So if you're trying to improve your competitiveness rather than through improving your exports, through improving your goods, through improving your services, then I think that is a very good thing. If you're trying to do it via currencies, then that is a very, very weak way of doing it, and it only ever can have very short-term impact. In the medium to long term, I don't think this is really a workable strategy. On the other hand, there are sort of other things that competition or competitiveness can lead to some sort of negative effect. I mean, Germany's Schäuble today warned against a race for the lowest corporate tax rate, so that these are areas where competition don't necessarily work. So, I do think in generally competitiveness or competition is a positive thing between countries. I think one of the problems you sort of have with the Japanese situation at the moment, on the one hand you have people like France arguing, or assuming it's a sort of competitive devaluation and you're targeting your currency, but Japan is not doing it with direct intervention, but via policies, and these can be described as being geared toward domestic issues. So I think it's a tricky thing at the moment to sort of argue to say what is really domestic and what is targeting specifically the exchange rate.
Thank you, Natascha, for your insights today. We will be bringing you updates on this meeting next week. Have a great weekend.